traders, Raghi here. Back in July, I talked about the light at the end of the bottom, and I discussed the bottoming process. And I thought, you know what? It's time to revisit that. There are a few distinctions that on these charts and in the target rate probabilities could be a needle mover. So we're going to talk about the macro of what is going on with the Federal Reserve, and we're going to talk about volume levels that continue to perform throughout 2022. So let's take a look. We'll start off with the chart. If you can read a line chart, you can read the V-score. It's just really that simple. And the last time that I said, hey, prepare for a bounce was back in here. And the reason for that is we have this support area right along this area of the -3 standard deviation. So we're looking at an anchored VWAP, and I'm looking at the standard deviations of the VWAP. Really powerful because it lets us know if we've wandered a little too far from home, if you will, right? So the closer we get to that, the more things look like a buy. 3 steps to the process that I am teaching everyone on Saturday. It is one setup, 3 individual pieces. No setup is one thing. It's the culmination of 3 things. In the case of the setup that I'm teaching you all, volume, underlying market trend, price pattern, okay? Rinse and repeat. In this case, we got the bounce, and, well, here we are once again. I will say that, look, gang, just because we make a lower low doesn't mean the markets are ready for free fall, which is what all of us are sort of holding our breath worried about, right? I guess to varying degrees. Well, I'm not, but I know that's out there and there's a lot of concern and I get it. Yeah. The last couple of times that we have bounced, it's been off the -2 standard deviation. Now, there might be a lot of reasons that accompany that. This is for sure. But nonetheless, when we get to the -2 standard deviation of volume, we bounce. So you better believe if we get down to about 35.10, 35.05, I'll be looking for yet another opportunity to take advantage of a bounce, or at least expect support to kick in rather than, what everyone's talking about, which is significantly lower lows. But on the flip side, the closer we get to the mean, and even to the mean, which is near 4,100, I will expect selling pressure. So this isn't just buy support. This is also be respectful of where the resistance is. Why the pivot from the Federal Reserve? So while I'm looking at price and volume, we also know time is a part of this. Let me show you here what's going on. And I've looked at this now for a couple of months. And the last, I'd say, 4 or 5 weeks, this has been very apparent. Here's the pattern we're seeing. When our May target rate probabilities start to go below 5 and 5.25%. We start seeing a little too much expectation for, say, 4 3/4 or maybe even 4.5 to 4 3/4%. This is too low. And Jerome Powell says, nope, you are all not hearing me. You're not in alignment with where I want to take it. And he'll say things like he did yesterday. So we start to do what? We factor in 5% more strongly, or even 5 and 5.5. That's where he wants us to put our expectations. I say that not because he texted me and let me know, but because every time we see comments like the ones from Mary Daly, they're going to come when we're pretty much in alignment or maybe too high on our expectations for rates. And again, he can see what we're all discounting. It's in the Fed Fund futures. It's in the target rate probabilities. So when we get too far to the right, you'll see the commentary from the Federal Reserve members is less hawkish. But when we get too far to the left, Jerome puts us back in this spot. So if we can just, darn it, stay here, right? He won't have to keep course correcting and creating volatility like yesterday. I will say that overall, look, gang, are we lower? Yes, but are we hitting new lows? No. Remember that since mid-July, August, expectations were for about 3.25% target rate probability, also what you might have heard called the terminal rate, right? So so that was the peak and plateau in terms of Fed rates. Now we're more close to 5%, even 5.25%. Almost a full 2 points higher. And yet we're not even able to go down that spiral of doom that everyone keeps telling us is going to happen. We have aligned to almost a 100 basis points or 2 percentage point higher Fed target rate without falling to pieces, right? Very interesting. That's what I'm going to take away from where we are right now. Barring any geopolitics, the bottoming process is still in, gang, and it's going to be hugely dependent on a negative 2 standard deviation holding. And it's not just that, and this is the macro part of it, us not getting too fond of target rate probabilities below 5%, because that's when that course correction comes fairly brutally. All right? Keep an eye on those. These are measurable. That's the most important part of it. It's not speculation. It's not guessing. And this is how I'm measuring it. All right, gang, if you haven't already checked out the replay from yesterday where I showed you how I've been day trading through summer and how that has been going and the process that I'm using, check that out at simplertrading.com/money-replay. And of course, the class is coming up Saturday, simplertrading.com/volume. Make volume a part of your trading. You're going to see things other traders simply do not. All right, gang, be good to each other. Thanks as always for the feedback, the comments, the questions, and as always for smashing that like button. I'll talk with you in the next update. Hey traders, Raghi from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.